when's the pullback coming? I'm not in. I want to get in, but is there going to be a pullback, and at what price should I put my limit? They'd like to buy at lower prices. They're waiting for that lower price, and every time we get a couple of percent off, I think the general trend is still going to be upwards, and there's armies of investment managers out there who don't have enough gold in the portfolio. Morgan Stanley even came out and said, now we're 60-20-20, with 20 in gold. Now, whether they're really putting 20 in gold or that's just a sort of general comment, I don't know.
In today's news recap, gold breaks $4,000 barrier as investors seek safety. Gold has broken a new record, rising above $4,000 per ounce for the first time. The price of the precious metal has doubled in less than 2 years as investors and central banks rush to buy gold during a time of growing global uncertainty. The spot price reached $4,031 in London on Wednesday morning, up more than 50% since the start of the year. Analysts say it is the biggest gold rally since the 1970s. The surge has been fueled by several factors, including the ongoing U.S. government shutdown, worries over rising American debt, and new tariffs on imports announced by President Donald Trump. Central banks, especially in China, Turkey, and India, have been major buyers. They have purchased around 1,000 tons of gold each year for the past 3 years to reduce their dependence on the U.S. dollar. Ordinary investors are also piling in. Gold-backed exchange-traded funds have attracted about $64 billion so far this year, including a record $17.3 billion in September. Some analysts now predict gold could reach $5,000 by the end of the year. Hedge fund manager Ray Dalio said gold is a good way to protect wealth in uncertain times, calling it an excellent diversifier. Experts warn that prices could fall sharply if markets calm down, but for now, demand remains strong. As veteran trader Ross Norman said, it really is an extraordinary moment. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
And I won't name the bank, but it's a very major US bank, came out and said gold could reach $4,000 an ounce. And I looked at the price, it was $3,977. I thought, why do they wait until it's $23 away from the $4,000 mark to tell us it's going to reach $4,000? I mean, that's kind of an easy one. But I suppose they just want to say we predicted it. Of course, you and I and many of your viewers have been saying that gold could go up to 4,000 and beyond, and we've been saying it for years. I think it's gone faster than many people expected, and the whole world, and I get many messages about from people saying this, when's the pullback coming? I'm not in. I want to get in, but is there going to be a pullback, and at what price should I put my limit? And I think the reality here is a lot of people missed the boat or feel they missed the boat, and so every time there's a pullback, they say, oh, it's happening at last, I'll get a lower price. And then that pullback starts to bounce and they say, oh, am I missing the boat? They'd rush in and then it gets pushed to another all-time high. So I think the problem we've got, it's not really a problem, it's just a feature, that gold wants to go higher. There's a lot of people who don't have enough of it. They'd like to buy at lower prices. They're waiting for that lower price. And every time we get a couple of percent off, if you're lucky, you get your order in when it's a couple of percent off. But the reason it's going higher at the moment, I think, is just a general uneasiness about holding large cash balances. And that's not just in dollars, it's euros, pounds, yens, whatever you like, maybe not Swiss francs so much. But those who've got large cash balances feel that they're not sure what tomorrow holds. There's a feeling we moved into a more unstable world where the pronouncement from some president somewhere can suddenly change the landscape for your currency. And, and people are saying, well, we've got in Europe, we got political crisis in France. UK, it's sort of edging on the edge of a political crisis. USA, there's a huge political crisis, people say, well, what's coming tomorrow? And the feeling is they've got to do something with their money, which isn't cash, because they just don't know what's going to happen down the line.
In today's news recap, Goldman hikes December 2026 gold price forecast. Goldman Sachs raised on Monday its December 2026 gold price forecast to $4,900 per ounce from $4,300, citing strong Western exchange traded fund ETF inflows and likely central bank buying. We see the risks to our upgraded gold price forecast as still skewed to the upside on net, because private sector diversification into the relatively small gold market may boost ETF holdings above our rates implied estimate, Goldman said. Gold has climbed 51% so far this year on strong central bank buying, increased demand for gold-backed ETFs, a weaker dollar, and growing interest from retail investors seeking a hedge against rising trade and geopolitical tensions. Goldman expects central bank buying to average 80 metric tons in 2025 and 70 tons in 2026, saying emerging market central banks are likely to continue the structural diversification of their reserves into gold. Western ETF holdings are expected to rise as the U.S. Federal Reserve is seen lowering the funds rate by 100 basis points by mid-2026, analysts at Goldman Sachs said. In contrast, noisier speculative positioning has remained broadly stable. Following the large September increase, the level of Western ETF holdings has now fully caught up with our U.S. rates implied estimate, suggesting the recent ETF strength is not an overshoot, it said. Now smash the subscribe button and turn on notifications so you do not miss out our daily recaps, and go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Got a little bit frothy, but that means we're kind of ripe for a little bit of a pullback. But it doesn't mean to say that the bull market is over. Not from a long way. I think the general trend is still going to be upwards, and there's armies of investment managers out there who don't have enough gold in the portfolio. About a week and a half ago, 2 weeks ago, I attended an investment conference at which many chief investment officers were speaking, from family offices and from some major banks. And I recollect in particular one of the major banks, it happens to be the one I bank with, was speaking, and he was saying, of course, with gold going higher, we've got it in our portfolio, we're recommending it to our clients, so we're using it in our discretionary portfolios. I thought, that's interesting, because my portfolio, discretionary, has got a 0% performance this year. I wonder if there's any gold in it. So I went to have a good look. And there wasn't an ounce of gold in my discretionary portfolio, despite the fact that CIO is standing on the stage telling everybody that they're smart because they put gold into the portfolios. So here's the reality. I think across the board, investment managers would like to say that they're in gold, but a lot of them haven't yet done it, at least not for all their clients. It's one of those things which is work in progress, and they've got to get it done by the year end, because at the end of the year, people are going to be getting their portfolios. They're going to be looking at the portfolio and saying, did you own the asset which beat NVIDIA, which is gold? And they can't not have it. So I think that's the direction of travel from the investment world. The question is, how much are they going to put in the portfolio? Will it be 1%, 2%? I did read one or two banks are saying 5% is the right number. And there was one bank, I think it was Morgan Stanley, even came out and said, now we're 60-20-20, with 20 in gold. Now, whether they're really putting 20 in the gold or that's just a sort of general comment, I don't know. I mean, it's not possible to put 20% in gold for every investment manager on the planet. There's enough gold out there at any price, so that won't happen. But if every investment manager could get to say an average of 2%, and I understand the figures are on average below 1% at the moment, that would push the gold price a long, long way.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.